Guys, welcome to the Silent Trading channel. Today I'll be analyzing the gold chart on Saturday the 10th of January to see whether the weekly candle and the weekly time frame has already reversed or is it still ongoing on the buy side. Today I'll be starting to analyze on the weekly candle first. As you can see, last week the weekly candle has created a reversal over here, right? And pushed the candle back down here and was able to close below support and then doing a candle pullback, but was still able to close below support, which means this reversal is a valid one. But as we can see, on a fundamental level, gold is still going up, which means a reversal to the buy side can also be created, and it is created right here, as you can see, because the price this green candle close is able to create a reversal, or we call it a price action to the buy side, which means price is still going up, and the next week price would maybe create a bottom week around here, around this week over here, because the market would have to clear off volumes from follow buy, or from people buying from fear of missing out, which means the next week candle would have a chance of pushing that down like this over here below this week, and then pulling back up and then pushing up to close above resistance, which means the price action to the buy side would be valid and complete and successful. Alright, so when price action to the buy side is successful, the next week we'll either be waiting for the price to drop down here but not touching support, because touching support means triggering what? Triggering buy limit. So by triggering buy limit, we would have to stop buying at least until the price has dropped down, a sharp drop below, clearing off buy volumes, and we'll be buying at the week before the next support, correct? Because this support is also a key level support. This is a key level support, which means when price touches key level support, price would have to dump further because buy limits are triggered, and the market will have to trigger out or sweep off all stop loss, which means market would dump below but not touching the next key support level, which is where buy limits are placed. So when market push down but not touching the next support, we'll be buying at this week over here or this week over here. This is what we depends on doing, and it all depends on the lower time frame, whether reversal will be created at this week here or reversal will be created at this week here. But as long as the price is not touching this key level support over here, buy limits or buy position are still safe. That's all I'll be saying. So what I'm trying to say is, if we are going to play on a buy position, or if we are going long, we will have to be buying when the price drop down to clear off buyers, but not triggering buy limit or buy volume from support over here. And when price push down, not triggering support, not triggering buy limit, and when we buy and the price start pulling back or creating a reversal and pushing up, that is where we know that our buy position or our buy orders are safe, right? And it will be trying to push up further and further, and that's how we know. And when we know that our buy position is safe, the next thing we're going to do is, when the price is retracing, we're going to start snowballing, correct? Because our buy position is safe, we'll be starting to snowball. We'll add on to our lot, we'll add on to our position, as long as the price is still safe. That's all we're going to be doing for the next week. And for the daily time frame, as we can see, the daily time frame it's still on the buy side. Because why? Because the latest daily key support level, which is this, was able to create a key support level, and the next candle pushed down to create a bottom wick before pulling back up and pushing up to close above resistance. So by closing above resistance, which means price is still going up, which means the next week candle will have to create a bottom wick but not touching support over here, which means not triggering buy limits. So by not triggering buy limits, this support would have to be the whole for the next candle. When the next candle push down, creating a wick and then pulling back up and pushing up. And by pushing up, which means the market is gonna trigger the sell limits over here for people waiting to sell. So when sell limits are triggered, when the price push up, price will have to soar. That is how we know that price is gonna soar, or that is how we know that price is gonna dump. Because if price is gonna dump, the price would have to be triggering buy limits or buy position from people waiting to sell at support level. Whether it is an insignificant support or it is a key level support, there will always be people waiting to buy at every support and waiting to sell at every resistance. So as you can see that the price have been able to close above resistance, which means resistance is broken. So the next candle will have to be creating a wick below and then pulling back up and push up. So by saying that, price action will have to be pushed down and then pushing up. And by pushing up, the next thing the price will have to do is, if it is able to close as a body, a full body candle close above this resistance over here, the next thing the price will have to do is to drop down to retrace, right? And by retracing, it is not just retracing but also clearing off buy volume by sweeping off stop loss from buyers and then pushing back up further. That is what we're gonna do, and that is what we are waiting to do. So if you're not buying at this bottom wick over here, we'll be waiting for the candle to close above this resistance before a pullback. When the price pull back or retrace, we'll start buying. And so when we start buying and the price is able to push up, triggering sell limits again and pushing up, that is how we know that our buy volume or our buy position is safe, correct? So this is what I'm going to do on the daily time frame, is that I either wait for the price to create a bottom wick on Monday and I'll buy, and then when price push up and was able to close and are able to close above resistance, is where I'll wait for the price to retrace one more and I'll add on to my position. So if you're trading in a perpetual or a gold future, this position will cause your initial position to push up a bit. Your entry price will be a bit worse than before. But if you're trading in a Forex market, your initial position will still be here, but your next position will be over here at this low wick over here. Alright? So this is what I'm going to do is I buy over here and I wait for price to break resistance, and then after a candle retracement is where I'll buy the next order for myself. Alright, so if this is only in a Forex market, if you're trading in a future, you'll be adding on your position and your initial position will be a little bit worse than before, and that will cause the price to fluctuate at over here. Alright, so even if your position is in a bit worse position than before, but if this position that you're buying is a valid one and the price start pushing back up, you will still be in a profitable phase, correct? So when price push up and is able to close above resistance, you may try to do a partial close over here, or close all your position in case price start to reverse here. Alright, so when price push up, if you're going to do a partial close, you can close your position and wait for the price to push down. If the price pushing down but wasn't able to touch with support over here and wasn't going to trigger buy limits over here, which means you can still add on it to your position if the price push down but not touching support level. And when price push down not touching support level is where you're going to buy more. And if the price start pushing up again, your position is going to be profitable and waiting to close your position above, or you may place your TP above previous week's high. That is where you're going to place your TP. So you either TP at previous week high, or you TP when you see the price has been able to close above resistance and the price is going to start retracing. that is where you're going to close your position. Either a partial close or a full position close. That's how you're going to do it. Okay. And then we'll go on to see on the 4-hour candle. The 4-hour candle is already creating a full buy side price action, and it's still going on the upper level. As we can see, the H4 is creating a higher wick, higher and higher wick, which means higher high and higher low. Here's a first low, here's a higher low, here's a next low, which means the next thing H4 we have to do is H4 or the 4-hour time frame will either be going up and then a full retracing down to create a higher low over here. So by creating a higher low over here is where I'll be waiting to buy, because why? A higher low over here is because H4 has break above this structure over here, this structure that I've drawn. So when it break above this structure, it will start pushing up a bit more and then retracing to clear off buy volume and then start creating a higher low, which is what I've called the next foundation price or a key support level. So this is where I'll be starting to buy, which means if price is going to start climbing up from here by creating a reversal like this, start to create a higher low in a lower time frame like this is where my position will be. So if my position is here and price start going up, creating a higher low, higher high, and when two higher low and higher highs are created, I believe that my position is safe. And the next thing I'm going to do is I'm going to wait to close my position when price break above. So when price break above what? Above resistance, above candle wick, and create a new high is where I'll close my position. And this is where I'm closing my position, be it a partial close or full position close. And then wait for the price to retrace one more, and you'll start buying again. So the whole thing is actually a repeatable phase of trading process, because when you have mastered a theory or a strategy, you know that you're going to be able to do the same thing over and over again and be profitable consistently, because when we are being professional in trading, we're going to need to be knowing how our strategy works, how our strategy is going to backfire on us, how our strategy is going to work on us, because if we know what we are doing, we are always going to be profitable no matter which part of the year, no matter which part of the market phases is going to be. No matter the market is going on a downtrend or an uptrend, you're going to be profitable because you understand the market. When market break resistance, retrace, we're going to buy. When market break support, retrace, we're going to sell. That's all we're going to do. Okay. So when price creating a price action and a confirmed price action is where we'll be entering a position after a retracement. We will never follow buy or follow sell, because by follow buying and follow selling is what we call a fear of missing out phase. So when people buy and sell on a fear of missing out phase, the market is going to drop down to clear off your orders, clear off your position. This is where we are not going to buy. We are going to buy when market retrace down. When market retrace down is where most of the people that have buy position from FOMO, that has sell position from FOMO, is going to get their orders closed or their orders forced closed or liquidated, or at least the market is going to pressure them into closing their position before going on the upside again. So this is what we are going to do next week, and please stay tuned to what I'm going to analyze for you guys next week. So I'll see you guys next week again. So please stay tuned and wait for my analysis video to be created, because I'll be starting a frequent analysis video, as you can see, and I'll be seeing you guys in every video. So if you like this video, please like, subscribe, comment, and share for this video for me. See ya.